All right, everybody. So today we're going to get started with 2025 real estate rates and more guidance, outlook, and predictions. This forecast is provided by LoanLynx, our new fintech company that matches brokers and borrowers with real capital lenders in real time. So we look forward to having you on the platform. Visit LoanLynx.ai. Now, today we're going to get into where we see the market heading. First, we're going to start with real estate. Residential real estate, we believe that there are going to be a significant amount of transactions not available in the market. So transaction counts expected to be down year over year over year. And, in most states and cities, we're going to see steady single digit growth. Very few quality price listings, people that want to buy, but a lot of people can't because of where rates are. And people that are needing to buy will be putting large down payments down or smaller down payments that barely get by to qualify. Danger alert, Florida real estate under $1 million. Look, 20 to 60% is the forecasted drop on our end that we're expecting, specifically in flood insurance areas, hurricane areas, and other areas that have risen drastically, where wage growth has not been seen. So again, we predict the $400,000 house might drop down to 320, potentially even lower. $600,000 house, depending on the area, could easily be in the high fours, even mid fours, again, depending on what else is going on in that area. Homes that have been taken out by hurricanes and flooding are very prone to massive price drops, and insurance claims are taking a very long time to process. So the longer a house sits, the more likely it is to be a fire sale. And if whole neighborhoods have been taken out or damaged, this could not be good for the overall market. New York City, new construction, luxury condos. We believe there's an increase in inventory coming with astronomical price points that developers have to attempt to sell at in order to make a profit. Uh, Unfortunately, with the amount of inventory out there right now, most people are not buying a new construction luxury condos for top dollar. But builders and developers haven't come to a realization yet that prices are not what they were in 2021 when interest rates were at 2 to 3%. So watch out for extra condos in New York City sitting on the market longer than anticipated. Land purchase from 2019 to 2022 is likely down 40% in value, even with approved plans. Most developers and builders are lucky to break even right now based on what the debt they have on the land is versus what the value is. And raw land is down probably even north of 60%. And usually that's directly correlated to the cost to build, along with what the actual cash flow would be on a project that is being developed to be rented out. So if you know anybody that bought land in the past several years, the past 5 years, be on high alert. They may be in some serious danger. Commercial real estate, I think we're going to see an uptick in transactions after 2 years of compression. Real valuations of assets are going to become a shock to the market, and I think we're going to get a good indication where values settle in at based on a price per square footage. The whole entire market, in my opinion, is going to be reset. Real estate lending, residential mortgages, it's a digital war for purchase transaction financing. It's a race to the bottom with zero thin margins. Focus on your relationships, your referral sources, maybe clients that aren't perfect on paper, but the reality is residential mortgages are going to be continue to be compressed, and it's going to be very difficult to make a lot of money. So just be prepared for this, plan for a rainy day, and definitely learn the alternative financing space. I think it's the year of the service or refinance uptick. A lot of servicing companies that are massive out there when a borrower is shopping for a refinance and they get their credit pulled. A lot of servicers will call the borrowers up directly. So if you know anyone that is in the mortgage space, let them know that they better stay on top of their past clients because the servicers are going to attack like wolves in order to try and keep that loan in-house and on their books. Unfortunately, most people don't have anywhere to go, and homeowners are going to tap their equity with additional home equity lines of credits and fixed second mortgage loans, which are now a thing in the market. So whether it's a primary resident or investment property or even a second home with low interest rates, you could tap your equity with a fixed second mortgage. The rates are a little bit higher, but it's great to get into if you need some cash in your pocket or in order to consolidate debt. Interest rates today rose even higher than this 4.48% mark on the US 10-year Treasury note. We predict this range to be as low as 3.9 all the way up to 5.5%. So actually, we predict rates going 1% higher than where they're at on the 10-year Treasury. And then once we approach the 5.5%, we're towards the higher possible end of the rate ceiling. But if you can see the rate movement in the past 5 days, we're up almost 20 basis points. So stay locked in on that. While most, small rate movements don't impact everybody, it definitely does provide to be an issue for the market as less people can refinance, more people fall into additional credit card debt and unsecured debt. So pay attention to interest rates. We predict 30-year fixed mortgage rates to trade between 5.75 and 7.5%, with our average rate projection to be sitting somewhere in the high 6% range. Commercial lending, most banks are looking for high quality vanilla deals that anyone can do. And then we have some banks out there right now that are interested in doing a little bit more hairy deals, but charging a premium on that. And if you don't have deposits with a bank, you really don't have a good chance of getting a loan with them unless you know someone that knows someone that knows someone. So be prepared, plan ahead. But 2025 is going to be a commercial real estate debacle. It's just the start of the debacle, which is going to carry through all the way to 2031. Loan maturities are going to be a problem. The pretend and extend game has come to an end. Regulators and auditors are forcing banks to refinance or get rid of bad or toxic or mature loans. The question is, will the borrowers cooperate? To be determined. 65% loan to value, owner occupied, non recourse is what the market is looking at right now. They want businesses that are operating with profit margins. They want to lend them money, specifically on real estate. They think that it's a very low risk opportunity, and they want to be able to manage your bank accounts and cash flow as well. So keep that in mind. We do have banks that go up to 80% loan to value. Just keep that in the back of your head. But 65% is kind of that sweet spot right now. You can get away with 25 to 30% down, but expect banks to pull back from the cash out refinancing business on the commercial side. Multifamily financing, 5 units and above is essentially dried up, due to rising costs and too much saturation of multifamily loans on banks' balance sheets. We don't expect banks to have much appetite for this type of risk. We believe construction and development financing is going to lead the way to the market. There might be a little bit more inventory in the rental space right now, but we think 2 years out there's going to be an additional shortage, just strictly due to not much development going on over the last 24 to 30 months due to rising high interest rates. So we think that's prime opportunity to begin developing affordable housing and rental units that your average person can afford. And we think that there's going to be a massive uptick in the private lending space for this specific asset class. Take out your pen because few deals pencil out. There are a lot of deals out there in the market flying around that just don't make sense. We think commercial rates are going to be somewhere between the low 6.25 all the way up into the eights, but the average rate on commercial mortgages is probably going to be somewhere in the low to mid sevens for a 5-year fixed rate period. And sometimes I recommend actually paying a higher price in the interest rate for a lesser prepayment penalty. So if and when rates do drop, 2 to 3 years out, you'll have the ability to get out of the current loan and into a cheaper, more affordable existing loan. Private credit and private equity, there's a surplus of money in people's pockets right now, and most people are deal junkies and want action on real estate. Some people just do deals to say they do deals with no profit, and other people collect real estate just to collect real estate. So if a deal doesn't make sense financially and doesn't cash flow, we would err towards the side of caution and not dive into a deal right now just to get a deal done or to say you invested in a deal. Don't chase when rates drop. It'll be a great deal is not an ideal strategy. If the numbers don't work now, there's no guarantee that they'll work later. Rising expenses, taxes, insurances, utilities, are absolutely going to be a burden and a drag on cash flow. And, unfortunately, there's no guarantee that rates are coming down anytime soon. So keep that in mind. Predictions. I expect crypto. Everyone likes a little crypto action. I think, Bitcoin could actually hit 250 a coin sometime in 2025, depending on what goes on in the world. Ethereum has a great shot at hitting 10,000 a coin, so keep that in mind as well. Alternative financing, hard money, non-QM, institutional bridge financing, ground up construction. That's going to be where the bulk of the money is going to be made. There's still a big unknown, and everything that we're doing, with launching LoanLynx and bringing education and opportunities to the market, all points in this direction that we're all in on this. Alternative financing is like a private credit market, outside of banks. A lot of high net worth individuals or private funds that understand that a hard tangible asset is something that they want exposure to. So expect the alternative financing space to carry investment real estate moving forward. I think most banks will be out of the lending game for the most part. Interest rates stay higher for longer. A ton of new players emerge. So if you're sitting here listening like, oh man, it's a bad time to enter the market, I think it's going to be the best time to enter the market. If you learn when things get tough, you'll be great when things get easier, or you'll just become better at it. I think new players are going to really come in and take over this market space. So keep that in mind. I think banks are going to report record loan defaults on the commercial lending side, and more banks are going to merge and bank acquisitions are going to take place now that banks' balance sheets have gotten a little bit healthier, or so they say. But I think they're going to wipe out, again, by second half of 2025, the amount of loan defaults and maturities, you can't hide the cracks anymore. The cracks are widening by the day. Most mortgage banks are going to go out of business, get bought, or choose to close their doors. They simply can't keep up with the cost and the regulation. All real estate and mortgage tech companies are going to struggle, with no growth, limited users, poor revenue. If there are no deals to be had, no one wins. Basically, short Zillow. You guys, if you're listening to this and you follow me, you probably know how much I really don't care for Zillow, care about Zillow, but they're not gonna be the next big mortgage provider by any means. Yes, they'll have their clientele, but just a perfect example of taking over opportunity with an unlimited checkbook to put the little guys out of business. So I'm curious to see how that plays out. But again, if rates are high and no one's refinancing, there's limited inventory to purchase. Where does that revenue end up coming from? It doesn't. Become anti-fragile or die. Go to visit reverify.com, set a free profile, join our community, and enhance the movement. And lastly, happy hunting.